Good afternoon, traders. Some of our strategies. Just going to go over what took place over these last 3 days since my last analysis and observations. And as I talked about earlier in the week, was how these higher openings were just golden opportunities for shorts. And you can just see this is the opening earlier in the week. And what's more important, I want you to. This is why I keep emphasizing the moving averages, because once again, this is what price extension, price extreme reversals are all about. Price gets overbought. They can't get any support at those higher highs, and they take advantage of it. Roll them, and they roll them hard. This was a gap fill, or at least a higher opening that was filling a gap. There was more below that we didn't get to, but this low right there was the 9 MA on the daily chart, and that's a pretty big deal. And I'll show it to you on a daily chart to see exactly, but you can see how that stopped on a dime and basically ran them all the way back up. And you just had the impression that for a while now that this has been due to take out the highs. I've been talking about it for a while. It was just a matter of time. And yet, here was another opening, I think, yesterday, and they did the same thing. Or this might, I believe this was yesterday, but we sat around for a real long time. Yesterday was a really thin day, and then nobody wanted any piece of it. They rolled it. And then the overnight session was fairly interesting, but pay attention to this. I drew this trend line earlier in the week, and you can see where it was way lower. Uh, I think when I showed it to you earlier in the week, it kind of came in where I expected maybe we'd fill some of that gap all the way down to 190, but we never got there. So look at this trend line, how it keeps coming up, and look at how price held it. But what's more important is these lows are now where the 9MA is. The 9MA on a daily chart has come up, okay? You see it right in here. And you can see how price kept tapping it, but they didn't go through it. And it's generally very bullish as long as price stays above it, especially on a daily chart. And you can see right here, here's a huge double bottom, and I'm going to show you this in a second because something happened this morning uh, when that number came out, which really wasn't good. But you can see this giant spike, and right here I'm showing it to you. It happened right after the number came out. Pretty much they must have just pulled all the bids, rammed them all the way down there, and they just came in and took advantage of the value down there. And plus, this is below the MA now, but look at the recovery on this. It was almost like nobody knew what they wanted to do, and then decided, you know what, let's just buy it up. And just look at this, because look how this comes into play. Look at that spike. Okay, you had that 730 spike, or wait, that was later. This is your 730 spike. That's a double bottom, by the way, as well, at '07, which I showed you on the daily chart. And look how fast price recovered. It was almost like, oops, I think we're wrong. We're going to take it the other way. And then you can just see all the institutional support come in just above the pivot. We got to the pivot right around the opening, and this is when I say you never want to get in the way of this thing once it starts to start chew up the upside. You can just see what they did to this. They brought in all the support before the bell. Right after they made that spike low, they rallied 16 handles right to the daily pivot, and they built on it, and they built on it, and they built on it, and they ran through R1. They didn't even stop. All right, this would have been, for a trend trader, an R1 reversal to the upside. Everything was still strong. Momentum barely pinched and rebuilt right at the bell. And you can see they rammed them all the way up to R3. And this is, once again, what I talk about, price extension getting exhausted. And this is just a classic case. I mean, you're talking about this is almost a 40 handle really off the low at 730. They're going to take profits. Now, this was just beyond my comprehension because it turned out to be an unbelievable trade. But I'm looking for this. I always look for the weakness at the extremes. All right. I mean, the market gapped, the market blew through the low, came all the way back up, and I opened above and actually gapped higher. In fact, after all of that, but I still believe that they'll come back and come down to the gap, which was around 22, which is what they did. Because look at his double top right above, just below R3, and there's a signal right there. You got a double top at 48. Let's mark this because this is how you take advantage of extended price and exhaustion at it. And once again, and I'm a little more, I mean, I've spent a lot of time with this platform, so I have a really strong understanding of price in these charts, and I've seen these patterns play out so many times that I recognize them. And like I said, this has a lot to do. See, this ribbon is kind of like pretty much a trend indicator, the momentum of the trend, and you can see how this is blue. And look at all this positive momentum, and price stays above it, and that's usually very bullish. Now you get this rollover right here, and this actually was building, but look at the difference here, and I'll show it to you. The ribbon's still blue, which means price could still come up to it, but what you want to pay attention to, can it get through it? And it doesn't. And this failure right there was a key sign. And then you got, look at the follow through, look at the momentum. Everything's changed, everything's bearish up here. This is a sign, and the price is well below the ribbon. And look at the extension on this one. This one barely touched R3, rolled through R2, rolled through R1, location to location to location, and this was I took them off because as they are hitting each level, because I didn't want to. I don't like looking at a gift horse in the mouth. I think it's important to take what you can get, and if you're lucky enough, they keep going. That's why I play runners. That's why I like trading from extreme locations, because you can leverage a little more at these locations, and you scale out of them. And I took some off down here, and that was it. I wouldn't want to play with it. This was an attempt to go up a little bit, and it failed one more time. And look at this low, 18. This is again just above the 9MA, and look at that, another bottom that occurred earlier. I mean, this is why I mark these charts like this, because as I've said so often, these patterns repeat themselves. And if you do just a little bit of research and you take a look at it and just backtrack your charts on a daily basis, you're going to be amazed at how often price keeps coming to these locations. And it's almost like that's their memory. It's like, you know what, we've been here before, let's do it again. And how many times are you going to see a pattern and not react to it? Just like it pretty much did all week with these higher openings. I mean, over and over again. Higher opening, sold off. Higher opening, sold off. Came down to the value locations, bought right back up, brought right back up. And that's what you're going to get in a bull trend extreme. It's getting exhausted at the higher highs, and it's coming into the support levels, and it's holding. And look what happened. It held right here at around 10 o'clock, and that was actually this is a pretty significant sign on this, or signal on this chart right here, red to blue. I mean, for crying out loud, this is also almost a 30. This is almost a 30 handle break. So I mean, once again, price got extended. They came back after a giant rally. They came back to fill the gap, which was right around the pivot. And now look what they've done. They've rebuilt, and they've come all the way back. So this is just the bigs taking advantage of the price extensions. I mean, why not? You got everybody leveraged up here at the highs. Everybody's all gung ho, we're going to the moon. And they pull the rug out on you, and they take it the other way, and they rip everybody out. And then they get everybody into it down here, and then they just reverse track. And this is how the big play. It's how the institutions take advantage of the price extremes. Like I've said on several occasions, it's not like the market isn't worthy of the levels, but it gets ahead of price gets ahead of itself. There's a lot of traders out there moving this around, and when it gets out of whack, the institutions take advantage of it. And that's what you got to pay attention to. You don't want to get caught up in something because everybody else is doing it. In fact, once we rolled off this double top, look at right there at R2. The institutions came in. That was the push that drove it all the way down here. Institutions came in one more time right there, and that was the last sell off. And look at the difference here. And then, like I said, this is my familiarity with this platform. I helped design these charts, so I really have a tremendous understanding of this. That's why I like this platform so much. And, you know, I'd have to spend a little more time with newer traders to explain a lot of this, if in fact they'd be interested. But, once again, key signal, 30 handle break, red the blue, and look at the ribbon has changed too. And now look at price. Watch how price, and as I told you before, like it was up there. See the rollover here? It can't get through it. That is another bullish sign. In fact, this would be another buying opportunity if you couldn't get it down here. This would be the next leg, and look, and that one paid off nicely too. So this is what location trading is all about. Even if you want to just trade it for a couple of handles, so be it. But there's so much opportunity to leverage a few more contracts and play the momentum as long as it's going in your favor, and you run a trailing stop against it, and that's that. You take out your initial profits on a couple of handles, and then you let some come up. You bring it up to about a 1-2 handle stop above price, and look, you're golden. And if it pulls back, it takes you out, so what? You locked in profits. That's what it's about. You're just playing a game, and the price swings. So that's it for today. I mean, actually, so I gotta maybe show one more thing I kind of noticed on, if I can pull this chart down right here. So this was the Dow, I mean the ES, and you can see this trend line that I set up right in here, although it's really not connected well, but I think you get the general idea. And that came in at around 15, and that's where all that bouncing took place here overnight, and how these lows kind of held. And here's that trend line again. I know it punches through. It's not a perfect thing. It doesn't just stop at a trend line because it's there. It says, oh, this is the trend line. They push it through more. That's how it is. But I think what's more important is the reaction that you get from it, even if it pushes through. Look at the rebuild. But I think a little more interesting chart is this Dow chart. And take a look at how this, let me open this up a little bit more. So take a look at this one. So this was coming, if I can get it, there it is. This is your 9 and your 18 daily MA. I think this is your 18. Yeah. So the 18, and like I said, this is why I continue to emphasize the moving averages. I always talk about how do they play out under 15. That's always your first thing when you're trading during the day, because price generally in the morning will fluctuate around a daily, I mean your 15 MAs. Okay, and you can see how they triggered all night, and then we rammed all the way above it, came back down to it. This was kind of the flush out, and this is the puke down here, and look how price came back to it. But what more important is that when a market pushes the extremes, you go from your 15 MAs to your daily MAs, and take a look at how this played out. This bottomed at 34, let's just call it 34.4. And it just goes to show you the importance of that. Let me bring that down here. This is your 15-minute Dow chart. Where are all these spikes? This is in the morning. This is after Europe opened. And then this is the 7:30 number break. And you can just see how they protected that MA on two occasions. One, on the fake flush out in the morning and a subsequent rally, and then the profit taken from that rally and the gap fill back and a little bit more. Once again, testing resistance, testing support, back in the middle. Now the Dow's, and I gotta be honest with you, the Dow's a little out of whack with all this, but that could change instantaneously. There could be just one of those days where we get Dow up 300, 400 and ES maybe only up 20 or 15 because you can see the ES has made a new contract high. The Nasdaq has not yet, but here's another nice key if you're trading in Nasdaq. Once again, averages, moving averages. Look at this low, and this was made today, probably on that same number at 7:30. And look at that. That came right down to the 9MA and held. That's really bullish. And that just goes to show you how significant those moving averages are. They're all looking at this. All the big players are looking at this. This is why I emphasize it so much in terms of when price gets beyond the normal trading range. So that's really your week in a nutshell, guys. This is extreme trading at its best, and this is something that really can be profitable to you with a little patience. And I get it. You're in this bull trend extreme, these constant rallies, but you got to think a little bit outside the box. You can't think like everybody else and just jump on board. That's why this movement gets like this. There's a lot of traders out there, and they just jump on it. And I'm not saying they're all wrong, but they're just reacting to the trend and jumping on it. And that's when you gotta be careful, because that's when the institutions take advantage of it and they roll them, because they got everybody geared to one side, and then they just slap them. It's right here, right here, and this day was a little odd. I don't know what. I think they didn't know what they wanted to do yesterday because of this number coming out, which really wasn't good. But yet the market is rallying. So it's either, I'm not exactly sure how to relate to this bounce, but it doesn't really make a difference what I think. And you shouldn't overthink the markets. You're just reacting to it, and you're following the signs that they're giving you. And you can see right here, like I said, this was the daily MA right here, or just above it. You can just see all these little double bottoms, this double down, double tops. When you see that, you could expect a possible price reversal. And you got it here, and you got it here, you got it here 3 days later. I mean, is there any surprise that we made this low at 7:30 and they came in and held it there? I mean, it's obvious because that's exactly the bottom we made the previous day, 3 days ago. So, I mean, is it that simple? I don't know. I mean, all I'm doing is reacting to these patterns that continually show something to me, and I react towards them. And that's how I trade. And that's what I'm trying to emphasize when I extend this to all you guys outside who are maybe thinking about it and want to maybe, start trading this. There's so much opportunity on so many levels. But I think the beauty of these location trading, and you have to have a little patience with it, is the probabilities of success are so much better from these locations than just being a scalper. And trust me, even some of the scalpers do well. Don't get me wrong, it's all in your approach to trading. I just believe that, when you get these significant turns, this is when you can leverage, especially when they come from location and key locations, and this is where your probability of success are much greater. And that's why I like to trade this way, and this is what I'm trying to share with some of you guys. Say, look at this run up right back to where this all started. So it's Thursday, and that's why I came on, because it's Thursday and Friday. It'll probably just continue to mark this up. So let the market do what it wants to do. I mean, this day could be done. I don't know. I'm done. I don't want to. I'm not going to fight it now. I mean, possibly if they give me a signal up in here around this R2, if they can roll over one more time, it's possible. I mean, they could come down back down to here around 35, which is, or maybe R1, but let them prove it to you. Usually around 1 o'clock, you do kind of get some profit taken, but these are two extreme bounces, or actually one, two, three. This is the fourth one. So these are huge swings, but profitable. So That's it for today, guys. And I'm gonna probably not come in on Friday. I'll probably take a look at this on Sunday, guys, and I'll post. And like once again, reach out if you like what you see and you want to learn a little bit more. And you know what? Maybe you have some suggestions for me that I haven't seen. So have a great day. Hope you guys do well. Hope you guys did well this week. I hope you took advantage of some of these gaps and these huge swings from from these extreme locations. They're there for the taking. It's just up to you to acknowledge them and to react to them. All right. Have a great night, guys. Have a great weekend, and I'll talk to you guys on Sunday night. Be good.